Please remember that nothing we say here should be taken as personal advice. The conversation is for entertainment purposes only. If you have questions about your financial situation, please talk to a licensed financial advisor. All right, welcome to another episode of Future Money, where we talk about the investments of the future.
That will make us money. December.
Last one of the year.
Yeah, 2024 in the bag.
2024 has been an amazing year.
Yeah.
You know, we'll just forget that yesterday kind of happened. It's one day.
Yesterday was Fed Day.
It's one day, yeah.
It's a reminder that markets go up and down.
The markets don't go up every single day.
Yeah. It's been a crazy good year, right?
Yeah. So we figured as part of our annual tradition in December, we'll kind of do a year recap.
Yeah.
What happened this year?
Yeah.
What we said was going to happen.
Yeah.
Where we were right, where we were wrong.
It's kind of a reality check, right? We want to check ourselves.
We got to hold ourselves accountable in some capacity. Somebody's got to.
Yeah.
Yeah. So again, 2024 has been an awesome year. 2023 was a great year in markets also. This one was even, we'll see how the last couple weeks finish, but this one actually turned out even better.
Yeah. We're recording on December 19th. The S&P is up 25% year to date.
Yeah.
I think it was about the same last year.
Yeah.
Again, it's very rare to have 2 years where the market is up that much. Year after year. I think one is the uncertainty of the election has been removed.
Yep.
Right. It's fair to say that everyone was anxious going into the election, right? And
although we didn't see the volatility that we normally see leading into elections.
Yeah.
And then we got the euphoria post-election.
Right.
Not necessarily, again, who's in power, but the idea that, the Trump economy is probably more poised for, less regulation, for possibly lower corporate taxes, et cetera. So, remains to be seen how many of those things actually come to fruition.
Yeah, but the excitement is real. Like CFO confidence is up, CEO confidence is up. I think the reality is the Biden administration just wasn't really pro-business, right?
Yeah.
So I think when you add the fact that we potentially will have less regulation, potentially have lower taxes, potentially have more M&A activity, all of these three things together, and earnings going up almost 15% next year are all positive. And then when you also look at some of the appointments of Trump, who are just basically pro-markets, the new Treasury Secretary is like an ex-hedge fund guy.
That's straight from the Trump playbook, right? Is hiring those kinds of people, hiring Elon Musk to what essentially
President Musk. You mean?
It's funny because I was actually watching, I think it was CNBC this morning, and they said the Trump and Musk administration. They actually said those words. Okay,
it is, man. It is.
And I was like, does anyone remember that J.D. Vance is actually the vice president? Apparently
it's so
not.
Funny because
it's the Trump administration.
J.D. Vance was talking that the government bill is going to go through yesterday, and Musk today just kind of
he's like, stop it, bro. Like you're not. Don't speak out of turn.
This is awesome.
Everyone's like, who are you again?
But listen, America is open for business. That's the reality.
For sure, that's the reality. And historically speaking, when the market is up 2 years in a row like this, it actually tends to be up a third year. Especially when that year is the year following a presidential election,
and when there is no recession,
and the Fed is cutting rates. Although after yesterday, the Fed is saying that they're definitely slowing their pace of rate cuts, which is kind of
it's important to. People are asking us all the time, what are the risks next year? I think the risks next year, which are being diminished, which are inflation coming back and rates stay high, which is not going to be great for real estate. It's not going to be great for the economy in general, right? And that's kind of what yesterday was about. When the Fed came in, it was like, hey, listen, maybe we're not going to cut rates as aggressively as we thought.
Which everyone knew, by the way.
Yeah.
Everyone knew that was the stance, but hearing it from Powell is always
correct.
Not as exciting.
Yeah.
Not to mention that, I think the NASDAQ has been up 90% of the days since the election.
Listen, this is why an opportunity to dollar cost average,
for sure,
an opportunity to never put all your eggs in at once, correct, right? It's kind of like you have to be smart about these things. And you have money coming in all the time. You need a pullback. You need a breather in the market. You can't just have an up every day. And I'm just like, I don't know what to buy. We have a bunch of contrarian indicators here, and one of them is when clients who never done anything think now they know how to invest, and I'm starting to get some of those.
Or random people on the streets, your Uber drivers, your whoever telling you that you should buy crypto, telling you should buy Palantir, telling you should buy what was some ridiculous stocks that are trading at 150 times sales.
Yeah. So let's go back. Let's talk about what we talked about this year.
Yeah.
What we got right, what we got wrong.
We got everything right.
Right. We're batting 1,000, baby. Let's go.
No chance.
So we talked about January. We talked about what to expect. We talked about NVIDIA.
We talked about NVIDIA. We talked about AI.
What a year that's been for NVIDIA.
I mean,
right?
It's been awesome. I mean, really, NVIDIA was really a first half of the year story.
Yep.
Obviously, after last year's insane run.
Yep.
But again, we got this right because I think this one was the right.
Easy
it was
one.
the no-brainer. It was like who's going to dominate.
Yeah.
But to be fair, we did bring it up in 2016. So it was definitely a brainer there. Yeah. Now it's a no-brainer.
Yeah. And listen, it's $3.5 trillion company right now. It's not you're not outsmarting anybody by buying it today. So you have to put that in perspective. But it's here to stay for a long time.
Yeah.
And this AI wave is just getting started.
Yeah,
right?
I agree.
And we've seen earnings growth from NVIDIA that I've never seen ever, and I think it's going to continue because this data center story is just unfolding, right? So,
and I think we're just starting to get I think we're starting to touch now the software side that's actually benefiting. Mm-hmm. The last couple of days, I've heard interviews from Mark Benioff, from CEO of Salesforce.
Yep.
Today, Accenture talking about AI
agents, baby,
agents, and how they're booking and how they're making all this money. They're starting to see the trickle down from the actual investment with AI chips down to the software side and how that's going to benefit.
And I think we talked about this before. Anytime they have a new technology, the adoption curve is initially is the infrastructure layer that does well, which is the NVIDIAs and everybody that is building the infrastructure. And then after that, how does that translate into real money, real efficiencies, real earnings for companies? And I think Salesforce is one of them. ServiceNow. There's a lot of companies now that are starting to deploy.
It's no different than when they built the railroads. You got to lay the tracks first before you can move the goods, right? So you build an electric grid, you got to build the grid first before you can actually charge for a utility. Yeah. So that's where we're at right now. So we got that one right. Again, that was pretty simple, that one.
Yeah. We talked about the elections that would not affect the markets much. That's what we said.
We did say that.
We did say that.
And again, historically, we have data to support us.
Yeah.
What we sort of missed this year was that there was hardly any volatility leading into elections.
Yeah, I think my win this year is to convince people to stay invested. I think we had a lot of uncertainty because of the political division in this country, where people either just didn't want to invest or just were uncertain about how the outcome is going to be. Yeah. And obviously, it was a lot of divisiveness going into it. So I think our win is really to let people stay in and just kind of give them the peace of mind to hey, don't let your emotions, get you out of the market because you think politically this way or the other way.
Correct. Yeah. And it was definitely beneficial this year. So again, the elections we know don't really affect markets much. Usually there's more volatility leading up to it.
Yep.
This year was actually surprisingly low.
Yeah.
I think the market was kind of discounting a Trump win already.
And listen, Trump is not a president yet, but he will be after January 20th, and there is going to be volatility. I guarantee you.
I'm sure. I'm sure there will, and there needs to be. And we saw actually the VIX, which is the volatility measure, after yesterday spike. I think the second biggest of all time.
Yeah,
which is hilarious after
the
a
VIX
time
is
where
the volatility measurement, right? It's it tells you the risk on the markets, basically.
Right. Which after not doing anything for a couple of years now, one day the Fed talks and then the market everything is extreme movements.
Totally. Let's talk about the Max 7 because we talked about that in February. Just to kind of put that in perspective, 2023, the Max 7s basically were 60% of the S&P's return, right? Yeah. This year, it's lower. It's 23, 24%.
I think we started the year with a big Mag 7 still leading the charge, but definitely as the year went on, after Q1, for sure, and definitely after Q2, we saw a rejiggering of the whole sort of investment landscape.
This is good. We want diversification. We want other companies to do better.
Yeah.
I think dominance of 6 or 7 companies is not a great thing.
Right. So what do we get wrong? So at the time we called it the significant 6 because we thought that Tesla was not going to be in the running this year.
Yeah.
What we got wrong is we did not expect Elon Musk to basically be the Trump right hand man.
Listen, I've always said this: don't bet against Elon, man.
It is pretty amazing. Like he just finds a way, and whatever you think about him, pro or con, like the man is just impressive in the things that he can do.
Yeah, he made quite an insane bet on politics, right? And went all in on Trump. He created the super PAC. In 60 days, he built this massive kind of ground, basically game that didn't exist, right? And helped,
and spent $200+ million.
Yeah,
and he's gained a lot more than that in market value. Since,
I think it was a
really
good
rate of return. if you look at the rate of return from his Tesla stock alone, post election, I think he have the highest rate of return on investment ever.
And I don't necessarily disagree with the fact that we need a pro-business environment. So I think that's going to be good, regardless of what you think socially about some of the stuff that's happening.
There's a lot of stuff to consider, and we want to be sensitive to the idea that a lot of this Trump-Musk administration is very insensitive to social issues. Right. But that's not an investment thesis that we can make. 100%.
Yeah, exactly. Right.
Yeah. So we got Tesla wrong in that scenario, although we didn't sell it
right all the way to September.
Yeah, exactly. But our clients still own Tesla. We still think
it's our second biggest investment in the firm.
Yeah, exactly.
So March, we talked about the Apple Vision Pro.
Okay, of all the things that we got wrong, I think this one is the biggest one.
We kind of were all gaga over how good this thing was.
I honestly haven't used it since that episode.
I used it maybe twice. Yeah. But listen, again, we talked about this is a slow adoption type product. I think in a lot of professional / industrial settings, as people are kind of exploring how this new device, new computing platform can be used, but it's just not a consumer product.
It's just not there at this point, and it's too big, it's too expensive. It doesn't. The battery's not as good. So maybe it's a few years from now. Like the system is amazing, but how many people are actually going to buy this? I mean, Apple stopped production.
I don't think anybody was talking about an Apple Vision Pro for Christmas. That's for sure.
Definitely not. Maybe you could get some at a discount.
Micah, do you want one for Christmas?
Speaking of which, we have he's not on camera. We have
one of our most ardent fans here,
number one
in
fan.
Studio today.
My son Micah is here watching the magic happen here.
Yeah, exactly.
But Micah's not getting a Vision Pro for Hanukkah / Christmas.
Yeah. April, we talked a little bit about real estate. We had John Groman from the agency come over and talk to us about rates and so forth. That's a story that's kind of still playing out. Rates, unfortunately, have not dropped. Everyone was expecting interest rates to drop. Even though the Fed is cutting rates, the Treasury rates or the 10-year Treasury, which really what determines mortgage rates, hasn't really moved down, which really is problematic for real estate. Although a lot of people are starting to kind of get used to the 6% plus mortgage rate and making some moves. Yeah.
I mean, we had a couple months where rates dropped. We had a month really where we had a significant drop. We went sub 4%. We went to 3.8% on the 10-year. We're back to 4.6 now.
Spiked big time last week.
Yeah, which is a huge. And after yesterday too, we had a big jump. So that's a big move. And regardless,
let's kind of and what that means. I know sometimes this gets too technical, but what that just means is that the market, and we always say the bond market is actually the smarter place to look at what investors are thinking. But what that tells you is that the market is worried that inflation is going to come back.
Yeah, and that can be the case, but I think the positive case that people forget about also is that could also mean that the market feels that the economy is very strong. Yeah, and so. Right, we've been living in a world for 2 years where we had this rate inversion, right, where the Fed funds rate, the short-term rates, were significantly higher than the 10-year rates.
Right.
That's not normal. That happens during recessions usually.
We
right?
haven't had that.
We haven't had that. So we're renormalizing. The Fed has been cutting rates. The long term, and this is actually something we did talk about with John when he was here. And when the Fed started cutting aggressively, we actually said this. I said this on one of our podcasts. Is I actually think the long rates are actually going to go up because the outlook for the economy is actually positive.
Yeah.
And so, unfortunately, that's not great for real estate, real estate purchases.
And also, like I think, to your point, low rates is not necessarily great things, right?
Correct.
Like when rates are 2%, 3%, that just means we have other problems.
Yeah,
right?
we have a bad economy.
Right.
And for years, we had a sub 2% economy.
Right.
And that's why we had zero interest rates. And obviously, when Trump came in the first time, he raised a few times, Powell raised a few times. Then we got hit with COVID, and then rates went to absolute zero. And the 10-year at the low was like 0.5% or something insane. And so we're in a renormalization. Yes, maybe
the imbalances continue to be there because a lot of people have mortgage rates at 2.5% and 3%. They just never move,
And when John was here, we also talked about the new rules where the lawsuit against the realtors.
Yep.
Turns out nothing has changed really. Like they're just like now they have to disclose it, but nothing. They're still charging.
There's more negotiating happening. Yeah, but that's really it.
I know. Yeah, I haven't seen much to be honest.
In May, we talked about corrections because we had our first big correction of the year.
We had a correction.
It was a correction. Yeah. It was very short lived.
It was a true intraday. We did almost hit. I don't remember if it was in May or July because we had a couple, but where it was like within a month we had gone down 9%. And back up to the high.
Correct. Yeah. And this is kind of what you want, right? Like, or not necessarily what you want, but this is kind of what happens.
Yeah.
And you have to be prepared for it. You have to understand their allocation are hopefully built to withstand these kind of things.
Right.
These are opportunities to buy stuff. Like, you know, when the market is going up like it did for the last 2 months, you know, it's sometimes it becomes tough just to go in and buy.
You don't know what to buy.
Exactly.
It's very hard.
It gets expensive, right?
Yeah.
So I think we're going to have more of those going forward, obviously, and we'll just have to understand that those are opportunities to buy. But at the end of the day, if earnings are going up, if companies are making more money, that is always a positive thing.
Yeah, and the premise over the next several years, you know, we can't tell what happens on a year-to-year basis. But on a multi-year time horizon, like the idea that AI is going to help supercharge the earnings and the economy, that's the use case that we're talking about.
Right.
Again, does it happen? We don't know for sure, but that's what we think, and that's what I think a lot of people are thinking, that earnings will continue to go up. The market is willing to pay more for earnings today than they were 5 years ago because of this idea that we're going to have productivity. And we had the biggest productivity number in years actually last month. And I think we're just at the beginning of that.
And I think also the story is it's really important to appreciate how big America has been in this whole kind of technology kind of I don't know, it's revolution really over the last you know, I was doing some research for some stuff that we're doing, and 12 years ago the Mac 7 were at $1 trillion in market cap. Today, they're 18 trillions. That's crazy. 18 times in 12 years, right?
That's pretty good.
There is no other major tech company outside of the U.S. except for China, which is Tencent, and they're not doing as good.
And the Chinese government stifles.
The Chinese government stifles them, right? So most of the innovation is happening in America. And most of everyone, I mean, you and I were in Brazil last month or last week, or 2 weeks ago.
2 weeks ago,
and like the conversation then is like everyone is so envious of how good our economy has been because of this innovation, because of the ability of the capital markets in the U.S. to create so much more wealth and really new ideas and new ways of doing things.
And I didn't get nearly as much shade about Trump being our president this time. The first time I got a whole lot of shade from the international world. This time I got a lot less shade.
I was in France during the election, and people were just confused.
I mean, I think now nobody else is confused. Everybody kind of understands that this is a business decision.
That's exactly it. And I think that's kind of we all this is the reality is we all in this together, and we want this administration to succeed. And I think a pro-business America is one that is going to benefit a lot of people.
Yeah.
So, and across the globe, right? So that's kind of what.
That's the hope.
That's the hope, right? We talked in June about NVIDIA again, the Mac 7, because it's been such an insane run.
Yeah, I think what we got right here is in June we talked about how NVIDIA and the Mag 7 have kind of overshot it.
Right.
Not necessarily that they're
Bubble
overvalued
territory.
or anything. We talked about, is it a bubble? Are we in a bubble? We talked about all different kinds of what bubbles are, but I wouldn't say we're in a bubble. But we did talk about how we thought they got a little bit ahead of themselves. And we can see that actually since June, July, the Mag 7, NVIDIA is actually negative over the last 6 months.
In correction
territory. Which nobody would realize if you actually asked them. The rest of the Mag 7 have been, not as strong. Google has had a little bit of a stronger run, as it had been the laggard leading up to this. Tesla had been the laggard. So you see the couple that were sort of like falling behind had caught up now.
Reversion to the mean.
So, but the rest of the market overall, especially since the Trump announcement, has caught up. And that's good. That's definitely healthy. We can't have 7 stocks leading the entire world essentially every day.
And again, that's always what we want. And hopefully the story of 2025 will be one of a broadening of the market of, the rest of the 497 in the S&P or whatever, 493 will really start kind of bringing some weight into the markets. Then we had the Olympics in August. Man, that was what a coming out party for Paris. That was awesome.
Yeah, that was really cool.
It was really cool. Went really well.
We talked about all these sports deals, and now I don't know if you heard about these deals now about private equity getting involved in college sports now. So yesterday we talked with somebody about how the number 1 recruit for football from high school decommitted. I can't remember what school he was committed to. I think it was LSU, I want to say. He decommitted from LSU to go play for Michigan because they offered him $10 million.
Wow.
A college player.
18-year-old.
An 18-year-old guy who's never played a college snap in his life.
Wow.
$10 million. And now they're talking about...
so the schools can actually pay players directly now?
They're working all this stuff out, this NIL, this name, image, and likeness stuff. Originally was just meant to give kids
the ability
using using their image and
Right.
monetize their image and name and stuff. But now we're starting to get real life contracts. But because a lot of these schools are public institutions, it's very challenging. How do you separate it? Do you create a special purpose vehicle for the sports part? So they're thinking about this, but private equity is getting involved. CNBC actually came out with their list of the most valuable college franchises. Ohio State apparently was number 1, and Michigan was number 3 in that list. I think 3 or 4. So we're the monetization of sports, whether it be with.
So let's stop pretending these kids are going to college.
They're not going to college. Let's just stop it. And it's great. I hope they get a valuable education.
Right.
But let's remember that most of them are not getting these deals, right? Most of them are hopefully
it's the 0.01%.
Correct, right? Most of the kids who are going to college are just trying to make the team, right? So, but the idea, when we watched the Olympics, we were talking about the deal that the NBA made with Amazon. We talked about Netflix now having, Christmas games. When I was growing up, nobody played on Christmas and anything. Now there's 2 NFL games and 4 NBA games on Christmas.
Well, listen, I was looking at this stat, which is all the top broadcasts in America this year were NFL games.
Right.
It's just as simple as that.
Yeah.
That's the one thing that people want to watch.
Everywhere you go. So the Netflix deal for the 2 Christmas games, I joke. I talk to my son, Micah, who's here today, and I always tell him, I go, usually what I say in sports, it takes about 10 years, but they generally tend to happen. And traditionally, football has been a Sunday-only event, Sunday and then Monday night. Then we got Thursday night football. Right. Now we're getting Christmas Day football. We have Thanksgiving. And my premise is that in the next 10 years, I think we're going to have football on almost every day of the week because the demand.
At which point do you dilute
Well, it's not that you're thinking about Sunday, right? Because let's say 75% of the games happen on Sunday.
Right.
So there's a bunch of games going on at the same time. So, I watch NFL Red Zone, which is like shows you all the different games and who's about to score, which is a really fun way to watch it.
Right.
But if the demand is so high, why not, like if I'm watching the Rams play the Chargers, why not put that game on a Tuesday when there's no other games on, so I can watch it? And so my premise is that
you don't do anything in life.
Correct. That's fair. I mean, the MLB has 162 games. You know what I mean? So we got plenty of space, and I just think like the business behind sports is just tremendous, and I think we're still like scratching the surface.
Yeah, that's exactly it. And again, when private equity gets in, these are sharks. These are people that know what they're doing. Yeah. So there is definitely some returns to be had. And I think follow the money, right?
Yeah, I mean David Tepper, who's a very famous investor. I think it was like 10 years ago, 8 years ago now, he bought the Carolina Panthers in football, and they asked him, why did you buy it?
Yeah.
And he said, there's a lot of rich people out there, but there's only 30 NFL teams.
That's exactly it. Yeah. That's exactly it. Scarcity is a big thing, right? Yeah. When you have everything.
Yeah. And the franchises are worth insane. Like the Cowboys are worth like $10 billion or something. Like it's crazy.
That's exactly it.
Yeah.
And then we talked a little bit about private investments in September.
Speaking of private equity.
Private equity.
But maybe now you can buy into sports. Maybe that's that. I mean, I think that this might be an actual asset class at some point where you're like buying into sports franchises.
You can definitely, there is funds right now that invest in sports franchises. Yeah. I'm not sure how successful they're going to be.
Correct. Because the menu stock is public.
Exactly.
It's not a great.
Although menu is doing really well this year.
Are they?
Yes, they are. They really are. They have a new coach. They have a.
Okay.
The team is actually, they just beat Manchester City, unfortunately, last weekend. But whatever.
Cue the sad music.
I know. Cue the sad music, Alex. They were up 1-0 and then they lost 2-1, but whatever.
Sports, baby.
Sports. And then international is an interesting, it's as we traveled together. I traveled by myself, you traveled by yourself, and everywhere we go, the question is why America is doing so well.
Yeah. And I think the answer is there's two major answers to me, right? One is what we talked about already, is the tech.
Yeah.
Right? The tech innovation here. But I think that's an extension of what is really the ultimate overall reason, which is the U.S. is open for business. The U.S. incentivizes capital investment, growth. In technology, it's easy to say, okay, it's fine. It's like everyone bashes our healthcare system in the U.S., but most of the cures and the treatments come from here. Why? Because the investment is aligned with what you're trying to accomplish, right? Yeah, it sucks that our drugs are very expensive compared to the rest of the world, but they all come from here because the companies have a financial incentive to put these drugs out.
Listen, at the end of the day, economic prosperity is what drives global growth, right? Like if the U.S. doesn't do as well, and if we try to distribute wealth and try to put all these laws and rules to really stop, we're going to end up being like Europe or like Latin America, and that is just not what we want.
Yeah, and some people are like, oh, well, Americans work. I think this is the one thing I learned more than anything when I travel is that Americans work too much.
Yeah,
and everyone tells us, like we went to Brazil, they get a month or 4 or 5 weeks off. In France, I think they get how many weeks after?
2 months almost. 2 months,
right? And you're like, how is anybody going to compete? And it comes to the bottom line is the work ethic in the U.S. is different, for better or worse, right? Obviously, the pros are for business. The cons are our work-life balance is not as good here, right? I think, but ultimately, that's why. The textbooks keep telling us that we need to invest in international, and there's a story here where one of the, fund wholesalers came in and was like, you guys got to invest in international. And I literally was like, if you guys tell me one more time how undervalued the international markets, and this was like 5 years ago now, by the way, and it's still way underperformed. I'm like, I don't want to hear it anymore. Stop telling me the international is undervalued. Yeah. It's undervalued for a reason.
Right. And most international companies that do well actually sell into America. So
correct.
That's the reality. Yeah.
Exactly. And so, while there are some companies internationally that are good, right? Yeah. There are good investments out there. Most of these countries are not capitalistic in the sense that a U.S. is. So therefore, it's much harder to make a capital gain there.
Yeah. And this does not interfere with the idea that we have to be diversified.
Sure.
It's just necessarily not have 40% of your money in international market. And we've seen this a lot of the kind of robo advisors, for example, or a lot of like the big like Morgan Stanley / who just use these models,
or your target date funds in your 401k.
Correct. They're all
a lot of international exposure.
Correct.
And as such, you've had a dramatic underperformance because of that.
Correct. So you have to kind of make those calls sometimes about like, hey, where do I want my assets to be invested?
Yeah.
We run our international investment group here at the GK, and a lot of international clients want to invest here because they're like, hey, this is where I can make money.
Yeah.
Right? So,
I mean, right. And I have clients in Israel and clients who work in the field in Israel. The big companies in Israel, the tech companies, the cybersecurity, they all list in the NYSE or the NASDAQ.
Right. So those are the things that we help our clients make sense of and really take advantage of, right?
So, for sure.
And then we had the election in October or November. November. So, and obviously the markets kind of took off after that.
Yeah.
Everyone's going to the Trump bump.
The Trump bump.
Which
sounds like something else. It sounds a little bit like we're having too much fun at a party. It
is a bit
of bump.
Yeah, and I think there's definitely an over exuberance around an environment where everything is going to work out, right?
For sure.
There may be a bit of a sell the news type thing in January or February, right? Because it's good to talk a big game. It's good to have a pro-business environment. It's good to have M&A markets open up and all that. But the reality is we have to see it happen. And the U.S. government is a big machine that takes a long time to do things. It's a huge economy. So I think that's really the you have to balance those risks with the
I mean, we just saw it right now, right? We had a bipartisan spending bill in Congress, and Trump and Elon, and again we keep saying Trump and Elon, like Elon is the one in the White House.
President Musk, dude. President Musk.
So Trump and Musk are shot it down basically, and are saying like, no, we're not going to do this. So are we gonna suspend the debt ceiling? Like it's not going to be a thing anymore. So like you said, the reality is very different. I think in the end, like we always say, what matters is earnings.
Yeah.
And if we get a corporate tax cut, that's good for earnings. If we get less regulation, that's good for earnings.
Yeah.
Right. If we don't have to worry about Lena Khan antitrusting every company that sneezes.
Yeah.
Some of them
honestly, I am happy about it. Lena Khan was never qualified to run the FTC.
Yeah, and some of them were legit, right? You go after Google, I understand the antitrust, but some of them were so nonsensical. Yeah. And you're just like, this is not even an antitrust issue. Like you're just trying. This is a witch hunt at this point.
Yeah, like the Kroger thing. Like
there's
silly.
So many of them that and I was just like, so those are ultimately good for earnings if they happen. If we get sort of like this AI trend continue, and I think we're just at the beginning.
Yeah.
Then this is good. But like you said, it's good to manage expectations. Yep. It's good to know that when people are when your Uber driver is telling you about crypto or about what the next hot stock is.
Yep.
We joked about this because we experienced it when we were in Brazil, right?
Yeah.
We heard a lot about it. And what was the thing I immediately said, right? When we heard about it, I was like, oh God, guys, it's feeling a little 2021 to me.
Yep.
So it doesn't mean that we're not bullish on the market, because we are. We're optimistic, cautiously optimistic.
Yeah. I think that's the phrase, cautiously optimistic.
By the way, I'm always cautiously optimistic.
Yeah.
Like I think that's a good way to live. Number one, your regular life.
Yeah.
But especially in markets, cautious optimism is very good in the markets, because when you get to exuberance, I have friends of mine who have never bought stocks in their life, who are talking to me about cups and handles and trading patterns.
Yeah.
That's never a good sign.
Yeah.
So just temper your expectations. Make sure your risk is where you want to be, and that you're comfortable with it, and that you're not. You were 50% stocks because you were afraid in 2022, and now you want to go 100%.
Yeah. I think you're absolutely right. Like cautious optimism. The purpose of this Future Money podcast is, one, to talk to our clients, but also to kind of really cut through the noise, right? And the noise is sometimes we get over exuberant or overly excited. Sometimes we get overly negative, right?
Yep.
It's you have to temper that. You have to manage those emotions, right? And we'll close out this future money by showing this chart, which I love, showing like the returns of the market if you've excluded the best 10 days and if you avoided the 10 worst days, right?
Yep.
And the reality is it doesn't matter. You know, obviously you can't exclude the best 10 days, the worst 10 days.
Yeah, because how do you know when they're going to happen?
Because also the worst 10 days happen after the best.
Or usually the best 10 days follow the worst 10 days or something.
So you can't really do this, you know, and it's just such a futile game to try to time these things, right? And then obviously you have to manage your emotions around, oh, market's all-time high. Do I want to invest today? The reality is, you know what follows all-time highs?
More all-time highs.
More
usually.
all-time highs, right? So just have a strategy. Work with us. Work with your advisors.
Yes.
Have a strategy to be systematic in those things, and that's what will work out long-term.
And if you're worried about downside risk, you should adjust now.
Correct.
Not when the market gets hammered 20% to then say, let's adjust. One of the hardest things in investing is not buying the low, which is hard for a lot of people, but it's taking profits when things are hot.
Yep.
Right? And everyone goes, because you know, you sell NVIDIA at 100 and then it goes to 140 and you're like, oh, I'm so stupid, I sold it at 100. No, you're not. You're not stupid. You did the right thing.
Yeah.
No one ever went broke taking a profit. If you 5x'd your money.
I mean, how I manage those emotions is I know I'm making decisions based on the best information I have at that time. Right? The reality is hindsight's always going to be 20/20.
For sure.
Markets will always make you feel stupid somehow, right? So you have to understand that. And then when you make a decision, you made it based on not emotions, but the information that you have that's available to you. And they make sense for you personally or for your goals, right?
For sure.
So we'll close it out. We'll come back in January with our forecast for the year. Happy New Year, happy holidays, Merry Christmas, Happy Hanukkah, happy whatever you Kwanzaa, and thank you for your trust.
Thank you for everything. It's been a great year, Hatem. Thank you for being
awesome, man. It's great to finish it in Brazil.
I loved it. That was
2025, bring it on, baby.
Sounds good. All right, guys.
Cheers.
Cheers.